All right, Jeff, let's start off. What's your word of the day?
My word of the day is endurance. And if you think about endurance, Frank, this March Madness that we've seen outside of the basketball tournament, this March Madness has brought a ton of selling, and investors have to endure, because I'm cautiously optimistic that once we get through triple witching today, you will see markets rebound. I think we have a short-term bottom in place.
All right, let's talk about that really quick. That's something you highlighted to us. It's triple witching day today. It's options expirations. You say there's about $5 trillion worth of options expiring?
Yeah, not to get too wonky here, but we always look at the options market to help us better understand sentiment. With the VIX coming back under 20, that third largest ever put buying event we saw 2 weeks ago, those options are going to expire today. So $4.6 trillion worth of options expiring today makes today's moves going to be amplified one way or the other. So this is an extraordinary moment. If you look at the most crowded strikes in those puts that were bought, it's at 5,800 or 580 in the SPY. And that has the ability, once those roll off or expire, or people decide not to buy that downside protection again, that could allow the market to move higher about 2.5% if you look in the S&P 500 chart.
All right, so Jeff, you seem to think that we might be hitting a bottom in the market. We're kind of getting past some of this volatility. Nike CEO Elliott Hill, FedEx CEO Raj Subramanian, they just don't seem to agree with you. Investors don't seem to agree either. Also, we heard from Jeff Gundlach, who put the odds at recession at above 50%. What are you seeing that's giving you so much confidence?
You know, I have the utmost respect for Mr. Gundlach, but obviously look through the lens that he's looking through. He's a bond trader. He's a bond manager. So, of course, you're going to be a little bit more doom and gloom. But I think if we look at the Mag 7, and you know, Frank, I was scrutinizing, I was critical of the vulnerability of the marketplace due to the over-concentration of the Mag 7. Well, if you look at the Mag 7, it's down about 12% year to date, putting the NASDAQ still in correction, down 10%. So as we see that repricing, I think it's critical moving forward, because the other 493 stocks of the S&P 500 are actually positive on the year. So that breadth, that type of investor attraction outside the Mag 7, I think is really healthy. So once we get through this souring sentiment, and I love the fact that people have gotten more and more bearish, that just allows short covering to happen even quicker. So I remain fundamentally optimistic about some of the pro-growth policies, which we have not seen implemented yet, but nothing's really changed in my opinion. We knew volatility was going to happen in 2025, but this is finally the year to be considered about your exposure. We talk about equal weighting all the time in our Essential 40 ETF, but I also think there's opportunities to be a stock picker for the first time when we see the sector dispersion.
All right, Jeff, speaking of, what's your pick for today?
Well, I think you have to look at industrials. XLI is an ETF we like to utilize. But if we go back just a couple of weeks, Frank, we talked about Freeport-McMoRan, FCX. That was a stock that's now up 5% in the last 2 weeks, in the face of the market being down 4 weeks in a row. So I get excited about FCX finally breaking out of a 3-year range due to the fact we see gold at all-time highs. We're also seeing copper above $5. So that lag correlation from copper to FCX should put FCX as a bit of a safe haven trade for those stock pickers out there.